Good evening, everybody. Still a nice summer night here in Pittsburgh. And tonight we're going to kind of do a combination. What I usually become remiss is that with a lot of new members that come in all the time, I forget to go back to the basics. So one of the most asked about questions, inquiries, is a lot of people want to find out about the signals themselves and how to find them, and what type of way do you scan for those signals and patterns. So tonight we've got the great pleasure of having Jeff Gibby with Metastock here with us. So what we're going to do is to be able to track them down fast so they can do their analysis every evening or every morning. Metastock's got one of the best scanning processes out there. So with that, what we're going to do is we're going to go back to the basics, which is that through the years I've come up with 12 major signals. And those out of the 50 or 60 signals in the Candlestick universe, how do you change a Jeffology answer that? Or he'll probably be able to show you that pen afterwards when he comes on. But out of the 50 or 60 Candlestick reversal signals out there, I discovered as I was through the years, not through the years, probably the first year that I was doing this, that there was only about 12 that actually showed up most of the time. So as I kept going through charts time after time after time, I realized that if somebody was going to learn candlesticks, they would not have to spend a lot of their mental time and energy learning all 50 or 60 like I did, when the 12 major signals are probably going to be occurring 99.9% of the time on the charts, and the others will occur occasionally, but not enough to spend time learning them or memorizing them. So what I usually do, or what I tell people to do, is in the books, we've got all the signals and patterns. We've got them broken down into the 12 major signals. Learn the 12 major signals and understand what they tell you, and then kind of drift or leaf through the others occasionally just to refresh your memory that that they're out there, that if you see something that you recognize, you don't have to know what it is. You can just flip back to the book and say, oh yeah, this is another reversal signal. So anyways, I usually start out with a lot of the presentations, say, what are we looking for in any trading program when we're looking for signals and patterns? We're looking for that big price move, but more importantly, we're looking for what is telling us that that big price move is about ready to occur. And one of the basic functions of not only knowing the candlestick signals, but the T-line, which is the 8 exponential moving average, which has a very simple concept, which it boils down to what we call the rule of the T-line, that if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Or conversely, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. So knowing that and understanding what each of the signals are telling us, like the Doji star, the long-legged Doji with a big price range, the dragonfly Doji opens at the top, trades down and comes back up the top, looks like a dragonfly. And then the gravestone Doji is always illustrated by the Japanese race traders, that the warriors come out of camp, go into battle. By the end of the day, they're beaten back into camp, leaving their dead all over the field, thus the gravestone. Also, the spinning top, which is almost a Doji. It just has a little bit bigger body, but they still represent the same thing. They represent indecision between the bulls and the bears. So anytime we see a Doji at the top, and again, our top on a chart is I utilize the stochastics of 1233 And stochastics aren't a buying or selling indicator. A lot of people say, well, should we be buying if the stochastics are in a certain place? No, they're just telling you where the signal is occurring. Obviously, you don't want to be looking at a candlestick sell signal in the oversold condition. And you don't want to be looking at a candlestick buy signal in the overbought condition on a signal basis by itself. And we'll show why there's a little bit of difference when we get to the patterns. And also there's some simple rules of the T-line. But basically, the further away you move from the T-line, the higher the probability it's going to come back and test it. So that makes it more relevant when you see a candlestick reversal signal potential like a doji well up in the overbought condition away from the T-line. Get ready to take profits. They're probably going to come back to test the T-line. So anytime, this is what really turned my investing around. Is understanding how bad an investor I was before Candlestick came along. And it's got used, and graphically it shows you what most investors do. They buy exuberantly at the top and they panic sell at the bottom, which was me. And when I knew I was doing that, because I knew I must be doing that because I was the worst investor in the world, that I could start seeing, yes, if there's a gap up in the overbought condition, it used to be, I'd get so excited, I'd start buying. Then I'd ask myself, how come when I buy, everything turns around and goes the opposite direction? Now I understand why this happens. This is where everybody is exuberantly buying. So if I see a doji gap up in the overbought condition, I'm immediately starting to look for a reversal signal. So again, that doji, that far away from the T-line tells me it's time to start taking profits. And if a doji means indecision, a long-legged doji means greater indecision. And it's very simple. We have a simple rule of the doji that the prices are usually going to move in the direction of how they open it after a doji. So if they open it lower the next day and start trading it down, told you what they're going to do after that day of indecision. And that's exactly what happened in ADXS, stock that everybody's been following in the chat room. We had a long-legged doji, so that makes this trading tomorrow very simple. If it opens lower, you close out the position. The only way you can stay long in this position right now is it better open positive and trade positive, or if it opens positive, it better not come back down through the doji. Otherwise, you're going to have a bearish engulfing signal after a long-legged doji. So just these simple rules allows candlestick investors to get a much more clear insight as to what's going on in investor sentiment. A long-legged doji means indecision. A series of dojis means greater indecision. Start watching for that reversal, especially if your stochastics are up in the overbought condition. And if one doji means indecision, a series of dojis means greater indecision, and we watch to see which way they make that decision. When they start gapping it down back below the T-line, not only should you be out of your long position, but you should start considering going short. So very simple rules of the doji. If you see a doji at the top, take profits. Dojis at the bottom need to have bullish confirmation. Otherwise, the Japanese rice traders say the weight of the market could continue to push the market down. So what we want to see is a bullish confirmation the next day. And where's our first likely target? Remember, we have a simple rule. We want to be buying when we see a candlestick buy signal and a close above the T-line. However, if we're that far away from the T-line and we see a reversal signal in the oversold condition, we can be buying with the expectation that our first target is the T-line. So the worst case scenario is if they fail the T-line, we can probably be out with at least a break even or a small profit. But the likelihood is, again, because we're seeing a doji in the oversold condition confirming that it's more confirmation, or the implication is that we're going to be in an uptrend, and that'll be confirmed as soon as we start closing up above the T-line. So if you have that series of dojis followed by a bullish candle, pretty much tells you what's happened after that that indecision. Anytime I see these massive doji days or periods of dojis, and then they close it above the T-line, remember, this is a lot of indecision going on, And when they tell us what their decision is, usually it's going to equate into a very strong price trend. And because we have the simple rule of the Doji, if we see a Doji after a strong bullish move closing right on the major moving average, like or a resistance level, makes it very simple. If we know it's going to move in the direction of how they open it after a Doji, we know that they'll probably be opening positive and start trading positive. Dojis, look to see what happens after that indecision. If you have a gap involved in your trade, not only did they may have indecision, but that gap up told you they're very anxious to get back into that position. This is what we call your best friend. Anytime you see a Doji in the oversold area followed by a gap up, especially above the T-line, you want to be buying because the high probabilities of a very strong price move is going to follow. So a Doji at the top take profits. Doji at the bottom needs bullish confirmation. If one Doji means indecision, a series of Dojis means greater indecision. But here's the one that will make you lots of money. The trend will usually move in the direction of how they open it after a Doji. So the Doji is involved with lots of reversal signals that show you there's been a strong change of investor sentiment, like the left-right combo, which is basically a Doji followed by a bullish engulfing signal. Very strong indication there's been a reversal. Doji followed by a bullish engulfing signal. Or a Doji followed by a bearish engulfing signal. Tells you there's going to be a strong move to the downside. And if you have that Doji followed by a bearish engulfing signal, followed by a gap down, that shows you not only has there been a reversal, but they're anxious to get out. That's a very good time to go short. Also, the Doji sandwich is a big bullish day and then a Doji. Remember our simple rule of a Doji. It's going to move in the direction of how they open it after a Doji. So I expect if it opens positive with things starting to curl up, that this magnitude day and this magnitude day are at least going to be the same. So that Doji rule just allows us to see that if we're in a breakout area and they've gapped it up after a Doji, that this day right here and this day right here are going to be the same. We can also see that's going to be one of our patterns, a JHook pattern. So this is not anything difficult. It's just the fact that the Japanese race traders have illustrated to us that investor sentiment works the same way time after time, day after day, decade after decade, year after year. Like I said, slower than a decade, century after century. If trading weekly or monthly charts, can you still follow these patterns? Yes. Candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame. That time frame could be a 1-minute time frame, a 10-minute time frame, a daily time frame, or a monthly time frame. There is softwares, Richard, for scanning with TOS. They might not be as effective as something like Metastock and a pure that's what Jeff is going to be showing you here in a little bit. The bullish engulfing signal. This white candle completely engulfs the black candle. Not necessarily the shadows, just the body. Remember, the important factor of candlestick analysis is where does it open and where does it close. Anytime you see a bullish engulfing signal, especially in the oversold area, it's time to buy. The bigger the signal, the more compelling there's been a change of investor sentiment. Yes, generation after generation. And this is what we call a bullish engulfing signal with a booster. Notice that they were selling this off and then they reversed it, get a bullish engulfing signal. It starts a very strong uptrend. Is there a way to scan within Metastock for the Doji? Yes. And yes, Jeff is going to be showing you all this. I'm kind of giving you the info, and he's going to show you the process for finding strong reversal signals. We worked on that for a few years to get that all set up. Bearish engulfing signal, exact opposite. That black candle completely engulfs the previous day's candle, telling you there's been a change of investor sentiment. The hammer signal. There's only one rule that you need to know in candlestick analysis, and that's the number 2. The tail is 2 times greater than the body. The body can either be dark or light, but it basically tells you the bears have hammered out the bottom and the bulls have stepped back in. So what do you want to see after a hammer signal? You want to see that the bulls are stepping in. That's your confirmation. So very simply, and this is also part of learning how to use the stop losses, that if we can assume that the hammers are being confirmed, where do we not want to see it close if we're buying on this day right here? We don't want to see them close back below the hammer signals. That tells you the bulls didn't step in. Or if we see that little hammer gap up, just like your best friend, tells you there's going to be a strong change. And that's what the gaps allow us to anticipate, is what is our next price move going to be. The abandoned baby is a gap down. Remember, where do most people sell? A panic sell at the bottom. Yes, Penn, this is being recorded. And then what do we see the next day after a hammer gap up? One island reversal, what's the Japanese race traders call the abandoned baby, a very strong reversal signal. The hanging man looks like the hammer, but it's at the top. And it's called a hanging man because there's his head and there's his little legs dangling down. And it's kind of the precursor that it's telling you the bears are starting to take control. So what do we not want to see, or what do we look for after a hanging man? If they start trading it lower, it's told us that the bears are now taking control. And if they gap it down the next day, it tells you the bears are definitely taking control. Piercing signal, again, that number 2, it opens below any of the previous day's trading and then closes more than halfway up this candle. And the halfway point is critical for any decision making, because the Japanese race traders simply say if this is where the bears were in control and the bulls were able to open it lower and then bring it back through the halfway point, that means the bears are now in control. Start looking for bullish confirmation. Piercing signal, and also not only the piercing signal, but when we add other things to the chart, such as moving averages, as you can see, there's not a whole lot of information or indicators on these charts. It's the 200, the 50, and the 20-day simple moving average on most of them, and the T-line. So if we can see exactly what's happening at these major support or resistance levels, we can see them with candlestick signals much faster than everybody else. Somebody asked me how long is it, or how many days does it take to confirm there's been a reversal, and the answer is 0. If you see a candlestick reversal signal and it confirms the next day, especially in the oversold area, that is the confirmation. We don't have to, when we're buying, we're waiting for everybody else to have their systems confirm 2 or 3, 4 days later. The opposite of the piercing is the dark cloud, where it gaps up above any of the previous day's trading and closes. And again, this is different than a bullish engulfing. A bullish engulfing only needs to open above the previous day's close and close below the previous day's open. The piercing signal has to open above any of the previous day's trading and close more than halfway down this candle. It's called a dark cloud because the bulls are happy, sunny, shiny, and all of a sudden you have this big dark cloud on that uptrend. That's the reversal. The shooting star looks like a shooting star with the tail, again, 2 times greater than the body, telling you that the bears or the bulls took it up and the bears are taking control. Notice this chart showed a one island or 1 day reversal, or that abandoned baby signal. So anytime you start seeing the tails to the upside and the body's getting small, your shooting star is now starting to take place. And if you happen to see that occur right at a major resistance level, like the 50-day moving average, that's a good indication that they failed at that level and they're going to start taking it down. The inverted hammer is somewhat like the opposite of the hanging man, where they started taking it up and brought it back down. But this is my own observation, which is the hanging man, or the inverted hammer, if it opens positive the next day after the inverted hammer, probably, Grisella, we'll get to that, probably you've got a 95% probability or greater that you're in an uptrend. So anytime I see an inverted hammer, especially down in the oversold area, and it opens positive the next day, it becomes a very high probability trade. which also means if what I'm telling you is true, and most of the time it is, sometimes I lie just to benefit myself, but if it opens positive, where should it not trade at all? It shouldn't trade back below this area. If it does, you close out the position because that's exactly what the probabilities tell you it shouldn't be doing. You see that inverted hammer and a gap up, you want to be buying immediately. The bullish harami in Japanese means the pregnant woman. There's her body. There's her little belly sticking out. It's called an inside day in Western terminology. Anytime you see that, especially in the oversold area, start looking for buy confirmation. And what you want to look for is that bullish confirmation the next day and a close above the T line tells you there's been a reversal. Or you see the bullish harami and they gap it up the next day. Not only did they tell you the selling has stopped, but the bulls are coming back with great force at that point. So anytime I see a bullish harami and it gaps up the next day, I'm buying. And again, there's a very simple stop loss procedure. If this is supposed to be moving in an upward direction and it opened positive or gapped up, where should it not trade at all? Shouldn't trade below the halfway point of this candle because that would tell you that the bulls have not taken control. And the nice thing about the graphics of candlesticks is if we know this is a bullish harami telling us the selling had stopped and it did it right smack dab on the 50-day moving average, that tells me if they open up positive, there's a pretty high probability that the bulls have stepped in there at the 50-day moving average. The opposite of the bullish harami obviously is the bearish harami, which tells you the uptrend is over, get ready to start taking profits. The bigger the signal, the more compelling there's been a change. Get ready to go short. And if you see that bearish harami, hanging man, followed by a gap down, that tells you the sellers are starting to take control. Also, the Morningstar signal is a major reversal signal. It's very symmetrical. A big down day, a day of indecision, and the third day closes more than halfway up this candle. You're looking at them right now, Siren, Kent. You're looking at some of the major reversal signals. So there's your Morningstar signal. And where did this occur? Right smack dab off the 50-day moving average, or right off a major support level like the 200-day moving average. And remember, if you start adding the elements, remember our Doji gap up is our best friend, and you could also assimilate that into a Morningstar signal. That tells you not only the probabilities that you're in an uptrend, but you're probably in a very strong uptrend. And this is where the T-line comes into effect. How long do you hold on to this one? Until you see a candlestick sell signal and a close back below the T-line. The T-line is the 8 exponential moving average. I'm going fast, Amar. This is all recorded. I'm going fast because this is kind of a review of all the major signals and the patterns that work the best. What we want to show afterwards is how do you find these signals and patterns easily. So that's what Jeff's going to do. So there's our shooting star. And once again, look how far away we've moved away from the T-line, telling us we're probably at least coming back to the T-line, which means if we take our profits, we can always buy back if it bounces up off the T-line. Evening star signal with the hanging man in between. Where did it occur? Right smack at dab on the 200. Yeah, this is going to be recorded. Now, here's the strongest of all the signals. This is the kicker signal. Kicker signal is basically a downtrend where they open it here and close it here. The next day, they gap it up at or above the previous day's open and go the opposite direction. Same thing with a bearish one, and this was always me. I would be in a trade, and it'd be going up, and next day they gap it down, and I'm thinking, oh, man, that's bad news. If they would just please take it up one more time and let me out, I'd be so happy. But I discovered if you're in an uptrend and they gapped it down below the previous day's open, there's only one thing you want to do. Close it immediately, because that's not where it should be trading if you're in an uptrend. So anytime I see that little kicker signal, especially closing back up above the T-line, this is the result. The result is usually a very strong price move. So anytime I see a kicker signal, I'm buying immediately. Because if I can see that this is already trading positive after it opened, after opening above the previous day's open and going the opposite direction, I want to be buying. Usually I have to scramble around, see where the funds are, maybe close another position to do it. But I want to try to buy as fast as possible. The flutter kicker signal is a little bit different. It's where it opens and it gaps up and does a doji. Now I know the simple rule of the doji. It's going to move in the direction of how they open it after a doji. So if they open it positive, I'm already set for the next day to be buying immediately, because what do I know about a doji? They're going to move it in the direction of how they open it. And if this is a bullish day, then I've got a flutter kicker signal, which means if I took out this little doji or took out the little flutter, I've got a kicker signal, which represents a very strong reversal. Same thing on the bearish side. Anytime I see a gap down below the previous day's open, I want to be out of that position, and I want to be looking to start going short, because that's what it's telling me, is they are trying to get out with great enthusiasm. So if we can see the signals, and we can also see patterns, there's our fry pan bottom. We just went through a whole process saying we're looking for signals. Buy signals are in the oversold area, but a pattern is different. When they break out a pattern, it's usually going to be when the stochastics are in the overbought condition. And what do we expect coming out of a fry pan bottom? Very strong price move. So again, a close below the T-line equals high probability of lower prices. Some of the truisms about the T-line is that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you start seeing potential sell signals, get ready to start taking some profits. With a flutter kicker signal, you don't know until it closes because of the tails. No, if it opens, if you have a doji and the next day it opens positive, again, our simple rule of a doji is it's usually going to move in the direction of how they open it. More than likely, it's going to trade positive, which means it's going to create a bullish candle. Thus, your kicker signal with that little flutter in between. As far as the flutter kicker signal, you wouldn't know it's going to be a flutter kicker because of the doji of that day. Where would you put the stop? Back below the doji. All right, so here's some of the patterns that are very effective. First of all, we're looking for signals that break out of resistance levels. There's our bullish harami followed by a gap up. There's our kicker signal, which is starting our JHook pattern, which is one of our major signals. So we're always looking for this wave 3, the breakout. And how long do we hold on to it? Again, this is where the T-line becomes a very good comfort factor. We can just stay long as it stays above the T-line. Your best friend to the downside, how long do you stay short? Do you see a candlestick buy signal and a close back up above the T-line? So I used to trade candlesticks without the T-line, and I did pretty good. But anything prior to candlesticks coming along would have been anything better. But once I put the T-line on there, not only did my profits started escalating quite a bit, because it kept me from getting whipsawed in and out of positions that I should have stayed in. The fry pan bottom looks like a fry pan bottom. We're looking for something to break it out to the other side. So anytime we see this big fry pan bottom, we start looking for buy signals over here. Look at our doji sandwich. And what do we expect coming out of a fry pan bottom? A very strong price move. And then this usually kicks into what we call the classic, which is the JHook pattern. What do we expect from a JHook pattern? The prerequisite is a very strong price move, then a consolidation, and then wave 3, which is usually the same magnitude as wave 1. So that fry pan bottom, we're looking for the spot where it's going to break out, which is usually where the fry pan bottom started. And this is our expectation. That just puts us in. So again, look how at our stochastics up in the overbought condition. This is usually the excellent timing mechanism for telling you if you're going to be buying, this is a good place to be buying, because if it breaks out, it's going to break out big. If it fizzles, you get right back out of the trade. Yes, Jill, we are going to show how you find these when looking for the next day confirmation. Do you use the 5-minute? I usually want to see how it opens. And that's also, we'll do a night where we do entry and exit strategies, but there's 4 quadrants with the market opening positive, the stock opening positive. You buy pretty quick. The stock opening lower, but the market opening positive, you wait for that the buyers to step back in, back up above the previous day's close. If the market opens lower and your stock price opens higher, you don't have to jump right in. You can wait to see what that stock does based upon what the market is doing. And then if the market opens lower and the stock opens lower, you don't do anything. I'm telling you that didn't work that day. You don't want to be in anything. Now I forgot what the question was. Oh, so if I'm buying the next day and it all looks like it's confirmed, I may be buying within a minute or two, seeing that they're still buying after the open. Or I might be in 30 minutes later if the market opened lower and the stock wasn't doing anything, and then the market turns around and starts back up again. So we're looking for the breakouts. Notice we have kind of a double doji sandwich right here, right at the breakout level. Showing us there's probably going to be more upside. And yesterday we recommended AERI not too many days ago, I think on the left-right combo. And how long do we stay in it? As long as it stays above the T-line. We don't know why it's moving up, but we can see that investor sentiment is moving up, and this is what it did today. Popped up 12, it was up like 90% or so. So I tell people, trading off the patterns are based upon the reoccurring investment sentiment that has occurred for centuries and will occur for the next few centuries based upon human emotion. It just puts you in situations where the probabilities of being in the right place at the right time are greatly in your favor. Slow curves are basically a function of a smaller fry pan bottom. When the slow curve breaks out, it's usually a very strong slingshot effect to the upside. Notice our doji sandwich on the breakout. So if we didn't buy right here, we were buying on the positive open the next day because that told us the doji sandwich was taking us up. At least we knew we were in a JHook pattern. Do we always get big, huge moves like this on a breakout of a fry pan bottom or a slow curve? Definitely not. But it puts us in situations where the probabilities of being in those situations are pretty strong. Always looking for this little slow curve because that usually creates a very strong result. And again, the classic is a fry pan bottom, profit-taking, JHook pattern. So even if we missed this move, if we look back and see this is a big fry pan bottom and a strong price move, we know we can be buying here. Notice what moved this one out. A little kicker signal followed by a doji sandwich. And the doji sandwich has one strong result. There's usually going to be more upside. You mentioned the shooting star in the SPY even though it's above the T-line. Elliot, I'll get those. I've got those live charts up here. The dumpling top is the opposite of your fry pan bottom. You couldn't trade this if you wanted to until we got over here and started seeing the breakdown. There's expectations of a big move to the downside from a fry pan bottom. The cradle pattern is usually a series of dojis, and then a big down day, a series of dojis, and a big up day, kind of a little cradle. Here's the headboard, here's the bed, and here's the footboard. Usually a very strong slingshot effect to the upside. And it's not visually hard to recognize. If you see one doji in the oversold area, you get ready to buy. You see another doji, another doji, get ready for a big move to the upside, meaning a big move in the sense that the longer this indecisive condition remains, the stronger the next move is going to be. The JHook pattern basically tells you how to differentiate between a reversal and just a pullback. And that's based on what the nature is of the candlestick signals. If we see a very strong price move, and then it pulls back, and then you start seeing indecisive trading, and that indecisive trading is represented by dojis, spinning tops, little hammers, inverted hammers, telling you that the investor sentiment is not that strong on the downside. getting ready for the next wave to the upside. Makes for a very strong setup for a wave 1, wave 2, wave 3, which we call the JHook pattern. And there's a very simple rule. Usually wave 1 and wave 3 are going to be equivalent. So even if you miss wave 1 and you see a JHook pattern setting up, at least you can calculate what your next wave will be. And that will also be very good if you're trading options. You can be doing spreads knowing what your upside potential is. There's two places to buy. You can start buying right here, knowing that once it gets up to the resistance level, if it fizzles, you get out because you have a double top. If it goes through, you got a strong price move. Or if you're more conservative, you wait for it to break out through this level, knowing that this wave and this wave will approximately be the same. This is what we're looking for, that little JHook pattern. Do we always get into stocks that open at 15 and 2 days later close at 45? Definitely not. But it puts us in situations where the probabilities of that occurring is greatly in our favor. The scoop pattern looks like a scoop. It usually has a flat handle prior to the breakout. So right here would have been a resistance level, which was also the flat handle and the 50. But knowing that if we're buying down here, we have the potential of that scoop pattern because of the flat handle, looking for the slingshot effect to the upside. So we can be buying here or we can be buying here, knowing that the stochastics are black and red. It doesn't matter. One's a slow. It's slow stochastics. One is %K and one is %D. And it's been so long ago, don't ask me what that they mean. All I want to see is where are we in regards to the trend overall. And one of the major signals you buy after a complete breakout. All depends on what the markets are doing and whether I'm aggressive or not. I could either be buying right here knowing that there's one setting up, or I can be buying right here knowing that it did break out. It all depends on each individual's nature. The belt hold is one of the signal patterns that a lot of people don't pay attention to or don't show people. Belt hold is when you have a downtrend, then it gaps way down below the previous day's trading and comes back up into the trend channel or the trading area. Doesn't have to do a piercing signal, doesn't have to do a bullish engulfing. The deeper that it opens below the trading and comes back up into the trading range, basically what it tells you is there was lots of sellers and the bulls wiped out the sellers and sopped up all the selling. Now there's no selling in front of them. Creates a very strong up move. The signals and patterns can be used individually on stocks, or if you know what should be happening based upon your signals and patterns, there's our best friend, a big gap up. A lot of people say, well, I don't want to buy a stock that's already up 3, 10, 15, 20, 40%. You do if you recognize the pattern. There's your best friend. Then what do we expect after that? We can just stay long as this stays above the T-line, because we're in a 45 degree. Very strong pattern, because this right here has told you there was a strong change of investor sentiment. You can analyze what the Dow is doing on the same patterns. This chart could be a 1-minute chart, a 10-minute chart, an hourly chart, all depending on what you're trading. It could be a daily, weekly, or monthly. Again, it's the accumulative knowledge of everybody buying and selling during a specific time frame, and they're going to create the same patterns. There's your evening or morning star signal right off the 200. There's your bearish engulfing signal telling you the downtrend's in progress. This is where we made money right after the summertime. Notice there was the big dumpling top in the Dow all summer long. Not say all summer long. Most of the summer I was saying, go fishing, go play golf, because the market isn't giving us anything. It was so choppy and hard to trade. But we also knew to be ready for when it started breaking down, like opposite of the fry pan bottom, there's going to be a strong price move to the downside. Then what did it do? Remember, one of our patterns is a wedge pattern. and we can see which way they're going to take it based upon the signals. Notice how they broke it down below the bottom of the wedge, and that's exactly what happened in the Dow here for the last couple of days. We've had this wedge formation, and they broke it to the upside. However, today, on a short-term basis, look what happened in the NASDAQ and the other indexes. We had shooting stars. So what's that tell us? Well, in the NASDAQ, told us they failed right at the 50. I wouldn't be too surprised to see if they don't back off the markets, but then we just watch to see what happens at the T-line. So this allows us to have a much more clear short-term type analysis of what's going on in the market. So whether you're day trading, swing trading, long-term investing, scalping, no matter what you do, you've got charts out there that can give you a good sense of what's going on. So to find these signals and patterns, they're very easy to identify. We've written up the formulas, and so I'm going to turn this over to Jeff Gibby with Metastock, and he's basically going to go through and show how easy it is to find these signals and patterns, even if you're not fully educated yet on which signals to look for. His software programs or formulas will point them out to you. And so with that, I'm going to back off here, and Jim, I'll close down my screen and let Jeff come on. Jeff, welcome to the Candlestick Forum. Everybody's waiting anxiously to see your software.
All right. Thanks, Steve. Good job. Let's go ahead and get the desktop share up while we do that. Okay, here we go. Let's go ahead and share mine, launch the application, getting this monitor going. You should be able to see it in just a few minutes. I'm going to move a notepad over here. Let me know when that's visible to you. Should be visible now. I'll give you a little bit of background on you. Just go ahead and type when you can see my screen if you would. Okay. Paul says, yep. I've been working for Metastock right now. We just did the math last weekend. It's about 18 years. So it's a really, really nice job to have. I enjoy it. I started in inside sales, and I did that for about a decade. I talked to people, talked to them a little bit about what they're trading and what they were looking for in a computerized software program, and it was really, really great. After, for the last 10 years or so, I started in the BD team. And now I'm the manager of the BD team. And I'd say one of the things that I enjoy most about our jobs is sitting down with people like Steve, figuring out what they trade. And that's exactly what we did with Steve. I know we had been doing a lot of work with Steve coming up to the add-on, and I kept talking to him about we really need to create a product that really makes this easy. And I really appreciate all the time Steve put in with the team, and I really enjoy Steve. He's one of my favorite partners that we've got, and really proud of the work we did with him. This year, our Metastock add-on that we created with him, it took us a few years to actually get all the patterns exactly right, but actually won Reader's Choice Award for the best add-on of any product. And it was one of the awards. It wasn't the winner, but I think it was the first runner-up. So it was very, very good. I'm proud of the product. I'm proud of the work that we did to get together. Let me go ahead and get along with the presentation. I don't want to take too much of your time tonight. If you have questions, I will answer them, and I will show you a few of the things that you're asking about before. I do need to read this out loud. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I also want to point out I'm not going to try and give out any advice today. I'm not registered by the SEC. I want to show you how these things work and how they can empower you to make your own analytics is primarily what I would like to do. In case you're not familiar with Metastock, I'm not going to talk a lot about it today. There's certainly a lot of things that we're very, very proud of. We're a company that was started in a garage in 1982 by Steve Akalis. Our product has gone on to be rated #1 in its price category for now 24 years in a row. And it's a very, very successful software product. A couple of things that we do really well that I'm going to show today is scanning, charting, and real-time advice, and I'm going to show those really, really well to you. But there's a lot of things that I'm not going to be talking about, like we have a really cool forecasting module that really is beyond the scope of today's class, but allows you to do some really cool statistical analysis. We've got patents pending on it. And my goal today is really to kind of show you the work, though, that we've done with Steve Bigelow and his team over a couple of years to really kind of make this product and make his scans available. And so let's go ahead and get into that. And most of what we're going to be talking about, this is not what we're talking about today, but most of what we're going to be talking about today is how easy it is to find the patterns and how to use the expert advisor and how to kind of get that stuff into your charts. Okay. The product itself, we call it Steve Bigelow's Candle Profit Systems. And this is the patterns that we're kind of identifying, either by scanning or applying them to a chart. I did count them. I think it's about 20-something patterns on there. Let me just show you how it works within the Metastock environment. Okay, so let's go ahead and get into the Metastock room here. Before I kind of get into kind of how everything works, there's a couple things that I promised to show a couple of you. I wrote them down here. One was how to change the chart to candlesticks. This is Apple. And to change the chart into a candlestick, this is the bar chart. Simply just right-click on it. You can go into Properties, and there you go, Candlesticks. There's two types of candlesticks. I probably would recommend candlesticks, but candle volume just makes the bars thicker if there's more volume. So if you like volume analysis, you might want to do that. I'll just go ahead and apply that. Very, very easy to do. Again, simply what you're going to do is just that. To apply the T-line, as we mentioned, is a moving average. It's an 8-period exponential moving average. Correct me if I'm wrong, Jim. I don't ever apply it just by itself. I apply it using a template. But to do that in Metastock, you've got your drop-down list of indicators here. Find moving average on it, and you just drag it and drop it onto the chart. Yep, okay, good. I like it when I'm correct when I'm doing these things. And then you'll just change it to 8 exponential. You can change the color to what you want it to be and go ahead and click OK. Now, that's not the process I'd necessarily recommend, especially if you're a follower of Steve's stuff and have his candle power systems. What I'd recommend is you just right-click on your chart, go to either Apply Template, and there's a template that's already put together that's going to put all of the studies, the stochastics, it's already ready to go. And it's called CPS Bigelow Chart View. So if you've already got the chart open, just go ahead and right-click, Apply Template, and apply this Chart View template. And that'll just basically make your chart quite a bit different. It's going to give you the color coding. It's going to go ahead and put all the patterns on the chart for you, which attaches an expert advisor. And it's going to put all the stochastics on there, all the moving averages he uses, and right there's your T-line, your 8 exponential moving cross. Okay. Okay. Now, I do like to show this one off. This is basically the expert advisor that we wrote with Steve, and this is kind of one of the things that we're looking at. And I'd like to be able to kind of look at them, and it's worked very, very well on Apple. Here we've just recently had a scoop pattern followed by a bull kicker, and all of the patterns that we identify are going to be shown to you on the screen. So, for example, so you'll see them. Basically. The other thing that we did is, we wanted to we have a mechanism in Metastock that we call our commentary. And what we wanted to be able to do with our commentary is actually kind of explain the patterns and what we're looking for when we find a bearish combo, and to kind of give you some advice around what to do with it. So Steve and I sat down, we wrote some commentary together to kind of explain exactly what a bull kicker is or what a doji is. And to get to that in Metastock, all you have to do is you right-click on your chart and you just go to the commentary view. Okay, and that's going to open up your commentary view. You'll notice by default it's going to kind of default this to the very last day of the chart. There's not a pattern on this chart, so you're going to have kind of a little bit of an overview of the system and a little bit of information about Steve, but nothing to kind of tell you what a bull kicker is because one didn't happen today. We want to tell you what it is when it's important to you. But I can always go back in the chart. If I click on this bull kicker, I do have to hit it on the head. Let me go ahead and find it real quick here. It's going to actually give you an overview of what the bullish kicker is. So in this particular case, the bullish kicker presents consistent trading opportunities for long positions. This signal is even more powerful when it forms at a major support level. The larger the dark candle at the bottom is, the more powerful the reversal. Your exit strategy should be swift upon any trading below the open of the previous day's candle body. So it gives you kind of an idea of how to get out of it. Because they're somewhat subjective patterns and we kind of left it a little bit loose, we wanted to kind of give you an idea of what we're looking for the criteria of this particular trade. So we're looking for a moderate to large dark candle. The next day prices gap up at a previous direction. And sometimes you'll have 2 or 3 things that we're looking for to kind of identify this on the chart. The enhancements, because I'm going to show you how to run this on a scan, but the enhancements kind of help you figure out, okay, I have maybe 5 bull kickers today. Which ones should I be looking at? And so these would make the trade more profitable or more likely to be successful. If a kicker signal forms at a major support level, the signal is much more powerful. And the bigger the dark candle at the bottom, the more powerful your reversal is. Okay? So it's just kind of giving you an idea of exactly maybe how to kind of go in and instead of looking at maybe the 5 kickers, how to narrow down the list to the ones that you want to trade. Amir asked this question, in February and March, 2 months, no candle detail advice. What we're looking for in this particular one, and you're talking about right here, why wasn't there any candle patterns? We didn't find any in the chart in that particular scenario that matched our things. So in other words, the previous candle would have been this bull kicker, but in that February and March, for Apple, you didn't have any that necessarily fit our criteria that what we're looking at. And that's a really good question. So if we're in a period where, you know, you might be in this bull kicker for trade for Apple, but you want to take on another position, or if it's like right now on Apple today, we don't have any patterns, how do you go in and find them? And I'm going to show you how to do that as well because our scanning is actually very, very cool in Metastock. So I'm going to go ahead and open up what we call our power console right here. And charting, that's where you'll open up a chart. So and one thing that you can do is if we were to go ahead and open up Apple again, AAPL.O, we can actually apply that chart view template here. So we don't necessarily have to apply it from the open chart. We can just apply it as we open the chart. The other thing, we're not going to talk a lot about system testing. Metastock has a fantastic system testing engine. Allows you to really go in and figure out what stocks are going to work well with a particular strategy. And forecasting was that methodology I was talking about a little bit earlier, the statistical modeling. And it'll be part of your free trial. I'd recommend that you kind of go through some of the training that's around it. But what I really want to focus on is how to find the patterns today. Okay, so if I come in here to our exploration tab, what it's going to list all of the different scans that are available. Now, I've been working with Metastock for 20 years and I've written all kinds of scans. By default, you're going to have a lot of scans in the Metastock software program, but not as many as I've got because it is possible and very easy to go in and create your own explorations that you can save forever. The ones that you're going to have with the candle profit systems are basically the Doji Dynamite, the JHook, the power signals, the price patterns, and then a couple of bonus scans. One is designed to go filter out stocks that fit a particular criteria. Stocks that are above 5 with an average volume of at least 200,000. And then there's another bonus scan that you're going to get that's called stocks that are above 5 with an average volume that have a stochastics that are above 20, so they're oversold basically. Okay, the ones that we really kind of want to focus on, we've broken them up into categories. So there's a Doji Dynamite pattern, there's a JHook pattern, there's a price pattern, and there's the power signals. And if you hover over these, it's going to tell you basically this particular scan is looking for the Doji at the top, the Doji best friend, left-right bullish combos, left-right bearish combos. And we can run these all. You can easily just come in here and right-click on this and run all of the explorations at one time if you want. And then once you've kind of made your selections here, what you're going to do is you're going to come down to the instrument list. One of the things that has been a very, very big advantage to us is the fact that we are one of the few places where you can get Reuters data. And Reuters data covers Forex, it covers futures, it covers, it covers 378,619 instruments, basically. So if you're in Asia and you want to be able to scan this against the Hong Kong stocks or the Singapore stocks, or maybe the Australian stocks, or maybe the London markets, and you're in London and you want to trade those, we're going to have the instruments that you're interested in. Okay, and in that particular scenario, you just come down here to equities, find the exchange that you want, and maybe it's the Australian ETFs. You want to scan those 67 ETFs real quick. You're going to be able to do it very, very easily. In the case of the scan that I ran a little bit earlier today, I scanned it against the optionable stocks. All of them. There's about 4,281. If you're so inclined, you could come in here and you could scan. If you like to do sector analysis, you could scan the broad market, any of the sectors that you wanted, whether it was consumer staples or groups, and it's very easy. If you want to run a bunch of scans against a bunch of different stuff here, you just check mark the categories that you want, and Metastock will go in and it'll find the patterns that you've looked for against those scans. Very, very easy to do. Okay, so let me show you. Usually, it doesn't take very long to go through all of the markets. It's usually a few minutes per exploration. But I've already run it, so I'm going to show you just basically what the report's like and how to read that. Oh, your granddaughter's birthday. Have fun, Roger. So let me go ahead and right-click on this. I'm going to go ahead and just show you what the report looks like for this. So on this one, this was the one we scanned today. If we were looking for JHooks, now this is a JHook pattern, and this would be the fry pan bottom and the JHook pattern. Okay, one just means that this is actually a JHook pattern that's broken out today. An icon would be basically another JHook pattern. So we didn't have any fry pan and JHooks today. This is basically just JHook patterns. Okay, I'm going to show you the other report real quick. If I right-click here and go to the report, basically this one was looking for fry pans, bullish belt holds, bearish belt holds. Let me go ahead and make this a little bit bigger so we can see them. Dumpling tops, cradles, SL curse, and the T-line crunches. So you can sort these by the patterns that you're interested in. Maybe you're just looking for the fry pan bottoms. You're going to have a list of these. You could look at the bullish belt holds, the bearish belt holds. There was one bullish belt hold, the dumpling cradles. If you just want to take all of the patterns and kind of look at them one by one to kind of identify which ones you want, you just click on the Save List button here. You notice I have quite a few different lists that say CPS on them. I'll create a new one for today's class. Let's see, it is 917 CPS buys. Okay, go ahead and create that. And then I'm going to go ahead and dump my scan results into that. And that's it. You're done. Okay. Now that I've created that as a list, if I come back to that chart setting here, okay, I want to go through that list. Instead of looking at public lists here, I first had to take my symbol out. I'm going to go ahead and click on custom. Here's my 917 CPS buys. Okay. American Asset was the first one there. I'm going to again open it up with the template called CPS Bigelow Chart View, so it has all of my moving averages on there, all of the patterns. I can just go ahead and click on Open Chart here, and it's going to come in. It takes a few seconds to load in the data. I can kind of see how the patterns worked in the past. This looked pretty good. This bearish kicker was pretty good. This dumpling top was good. This bearish bull kicker was great, and now we're in a fry pan bottom. Can take a look at that and decide whether we want to keep this or not. If we want to look at the next one on that list, and there's about 171, we just click on this next instrument. The only complaint, and I'm not kidding with you at all, the only complaint I've really gotten on this thing is somebody called in and said it was too simple to use. And I'm not kidding. And I'm like, well, we tried to make it as easy as possible to scan and find the patterns and kind of get that kind of stuff. The simplicity was something that we really, really worked hard. And I think we did a really, really good job with this particular product. And I think that's why it's won the Reader's Choice Awards this year. But in any case, let me go ahead and kind of talk to you a little bit about what this is and kind of what the offer is today. Let's go ahead and okay. So again, this slide, we're not going to go through the things. So there's floor explorations that basically kind of encompass the whole thing. That's what the template looks like. This is more for if I don't have internet and want to talk about it. So those are the patterns that we kind of scan for here. This particular product we developed, we charge a one-time cost for it. You pay for it, you own it. It's $399. What I'm going to do for class participation, and I want to say thanks for coming today. Really appreciate your time. I really appreciate Steve's time. But we're going to do basically a discount offer on this. It's $299. You want to do it within the next week. And if you're new to Metastock, I know a lot of you have Metastock already, but if you need a trial access to Metastock, we're going to give it to you for $299. We're going to give you a 30-day money-back guarantee on it, and we'll give you a free trial to Metastock so you can go in and play with it, see how well you like it. Obviously, if it helps, it's going to be a no-brainer. You know, for trading, it's always a return on investment. Is this going to help me save time or make more money or both? And if it does, then it's well worth it. The pricing for Metastock starts at $59 a month. So it's very, very inexpensive product to use. It's been rated, again, 24 years in a row #1 in its price category. To take advantage of that offer, you can go to the website metastock.com/candlestick4m. A means add-on. If you have questions, I actually have guys that are ready to take questions in our chat. That's metastock.com/saleschat. And you can give us a call at 800-882-3040. I have a few messages. I'm going to come back. I know I kind of skipped over questions just to kind of let everybody out on time that needs to go to like a granddaughter's birthday party or something. But let me kind of take a look at some of the questions that are coming in. Charles says, I don't have the bonus scans. You actually have to request them from me, Charles. So if you're not buying today, that is. So just drop me a message. We wrote the bonus scans after we released the product. Steve and I were kind of talking one day, and he's like, I just want to be able to kind of go through and find stocks that hit a certain volume level and a certain close price, and that volume was 200,000, and I think the close price was 5. So we wrote that one, and then we wrote another one that just goes through and weeds out all the stocks that are not currently overbought as well. So just email me. I'll send you a copy of that, and it's just a simple installation process. So send me an email. Raj asks a very good question. Can the scan be restricted to an index or a watch list instead of the entire market? Can we add other criteria such as volume? Yes. And yes, and yes. And let me show you that real quick, Raj. Very, very easy, especially if you want to do an index. So if we come in here to a scan, and let's say we want to run this against just the S&P 500. Okay, I'm going to go ahead and click. What I'll do first is I'll uncheck all of the instruments, so we're going to scan 0 out of 378,000. And what I'm going to do is I'm going to come down to index constituents right here. Okay, and if you wanted to do, they're all listed. All the major ones are listed. If we wanted to do, let's see, the S&P 500, just find it on the list right there, and go ahead and do that. Now, you will have some volume scans that come as part of your bonus scans. That's volume that are above 200,000 and $5. And one of the lists that I've done is I've run a scan, and one of the lists that I actually have is under custom right here, and it's called the CPS pre-filtered list. So there's, instead of 4,500 stocks, it was 2,685 that we were scanning against. So you can run that pre-filter scan against and find the ones that you're interested in, and then just kind of run this as your scan every day. Just that easily. The other thing that's really nice is this has a memory. So if you're always scanning this list against these scans, you don't have to set it up every day. You just come in here, click tab, and click on start. So easy to use. And that's one of the reasons people really, really like it in this platform. Let's see. Steve asked, do you use volume in the pattern scanner? I'm trying to remember it from the design decisions that we used. I'm not sure we did or did not. I don't think we did, but that's just a guess. Suzuzu asked, do you have Ichimoku charting? And yes, we do. Amir sent me a private message. Let me go to that tab and see if it's important. Oh, Amir says, I am new to Metastock. Thank you, Amir. I really appreciate your get in Metastock. Do discuss some things about the software and advice from you and contact details. So I just gave you my email address. I am flying to do an event in DC and Pittsburgh, actually with Steve this weekend, funny enough. So if you do send me a message, give me a little bit of time to respond. But in terms of support for Metastock, what I would recommend that you do, I just opened up my browser here, and if you're new to Metastock, one of the things I would say is a really good resource, especially if you want to learn how to scan real quick or how to work with charts or that kind of stuff. It's not really that complicated, but I always find that having a little video that's available to kind of show me how to do it, and then I can actually do it on my own, is really, really helpful. So if you come to our Metastock page, metastock.com, and you click on product support, down here, and our support is really good. Like if you have questions, come in and chat with them. One of the things that I always ask in our live events is how many people of you have talked to support, and our support's all here in the same office building as we are. And they're very, very helpful. We get a lot of positive responses when we ask people how their support went. What I would recommend to getting started is right here where it says online training. You're going to see Metastock. Just go ahead and click on that. And there's basically a couple of things that you can go through. Here's our support basic list. Here's our advanced list. And what I actually recommend you do is just click on view them on our YouTube channel. They'll open it up, and then you can see all the lessons that are there. So there's a Power Console, the Explorer. This is the one you would go through to learn how to run the scan real quick, the System Tester. And you can just kind of go through the ones that are interested in. Now, we tried to keep these somewhat short. You'll notice they're 3 minutes long, or 9 minutes long, or 6 minute long. What we wanted to do is be able to kind of give you something you could go through very quickly, open up your Metastock platform and give it a go. So very, very helpful. And that's where I would recommend you start, Amir. And of course, our support desk is open for about 10 hours a day. In Dubai, you can contact them anywhere from early afternoon to late in the evening to well after midnight your time. So if you ever run into an issue where you just say, hey, I'm having a problem doing this, can you show me how to do it real quick? They'll get online with you and help you figure it out. Very, very good. Let me switch back over to the general chat room here. Bob says, do you use Bollinger Bands in any scans? Bob, there are Bollinger Band scans in Metastock. And I want to say very particularly that they're not part of the Metastock product. Or they're not part of the CPS product. They're part of Metastock. There's all kinds of different Bollinger Band scans that you can do to look for Bollinger Band breakouts and buy signals and that kind of stuff. So yes, we do have Bollinger Band scans. They're part of Metastock, but not part of the add-on. Okay? Mike says, as an end-of-day trader, what Metastock platform and data plan would you recommend? Okay, so for you, if you come up to the Candlestick forum, and Becky, thank you for pasting the link for me. If you come up to that page, I'll just kind of talk to you a little bit about what the different options are here for your Metastock trial. And make sure you understand it. For end of day, the answer is very, very easy. Okay. Here we've got Metastock add-on. This is a little video. There's a 10-minute video of me talking about this product. You've got kind of a breakdown of what the product is. Here you'll order the Steve Bigelow. Again, that's a 30-day money-back guarantee. If you're an end-of-day version, if you're an end-of-day trader and just want to be able to run your scans at night, select this option. Just $59 a month with your first month for free. Okay, and that's what I'd recommend. Now, after your trial, I'd probably recommend you talk to one of our sales consultants, because you can actually bring that cost down from $59 to about $25. Now, and the other thing is it does say Metastock daily charts, but it does update every hour, so you can actually go in and see what the market is doing just on a daily basis, with daily or daily or weekly or monthly or quarterly or those type of time frames. If you want a full streaming solution, then you do this Metastock real-time subscription. And again, either way, I'd recommend that you kind of do it, see if it works for you, and then talk to one of our sales guys about the options to purchase the software and bring your monthly cost down. The reason I like to do the subscription is I can give it to you for free, and then you can kind of see how well it's going to work for you. If it works well for you, I wouldn't trade without it, but if it works well for you, then you can kind of explore the options that are going to be most cost effective for you going down the road. Penn asks, you can get the monthly subscription for a $59 subscription for less? Yes, you can. There's actually a one-time purchase of the software, and in some cases that'll be better off because your data fees could be as low as $25 a month if you just want to do stocks or you just want to do futures and forex. In some cases it makes more sense to stay on the subscription, so you that's why probably like if you want to do both stocks and futures, stay on the subscription because you don't have a one-time cost. Cool. Amir says, you're welcome, Amir. Amir says, thanks. It's 5 in the morning. Have a good sleep. At 5 in the morning, you are hardcore. And thanks for using Metastock. If you need anything, I know you're new to Metastock, reach out to me or reach out to our support guys and we'll give you a hand. Okay? We do offer, with our delayed options, you basically, if you don't pay any of the exchange fees, you get delayed. So there is a delayed quote option as well. That would be this particular option, the delayed feed. Okay. All right, guys. I want to say thanks for coming in. Ted, I'll see you, I guess, this weekend. Thanks for coming in, guys. Give it a try. People love it. It's been rated #1 25 years in a row. Not only that, this particular candle profit system was actually rated I think it was the first runner-up as the best software add-on for any product, not just a Metastock product. It's been wildly successful. Customers love it. Try it out. The worst thing that can happen is you can not like it and get your money back. Let's talk about a no-risk scenario. The phone number to give us a call, and we do have people that are logged into the phones right now. They'll probably, if they get calls, they'll probably still stay logged in. So I would recommend you call them right away. Is 800-882-3040. All right, guys. Thanks for coming in tonight. Give it a try. You'll like it. I'm proud of it. And I'll see you at the next one.
Thank you very much, Jeff. Everybody, if you're trying to learn candlesticks and you want that head start where you can have the patterns pointed out to you, not only pointed out but identified so that you know that one's hitting or coming up, this is one of the best softwares you'll ever come across as far as being able to identify, learning and identifying the patterns. Jeff, thank you very much. We'll see you in Washington on Saturday. We'll see everybody in the chat rooms.